You know what? I think this is where it's quite handy that I was the youngest of 7 and nobody listened to me, and that didn't matter. I learned to let it like water off a duck's back. I am on a mission in this world, and it is on education. And people have been so surprised that I've been handing out silver. Jeremy, I go all around the world talking about sound money and handing out pieces of silver. And if I'm in a restaurant and I see a little family, and I usually, if the kids are about at least like 5, 6, 7 or older, I'll walk up to that table and I say, do you mind if I give your kids a gift? And I'll give them the dime cards and I'll explain it and say, you know, here's silver, blah, blah, blah. And the parents are so interested in it, but so are the kids. So there's a QR code on the back. This is really about creating a global movement, because if we don't, governments and central banks aren't going to give up their money monopoly. Maybe they'll transition it from this system and take even more control, because you always have to look at not just what do you gain, how convenient. This is so much more convenient than, oh my God, this is going to pull your pants down. When they were holding, they don't call it a confiscation, but I don't know. Foreign governments had the gold in the U.S. and Nixon said, nope, you can't have it back. Isn't that a confiscation?
You think we're close to that?
I do think so. Yes, I do. Why would they stop? You know, go on that, Fred. Yeah. Pull up the purchasing power. Put your birthday in there. I don't care when you were born. Put your birthday in there. Why would they allow you to hold your wealth at the last minute? Oh, yeah, we've gotten enough. Oh, yeah, we're going to protect you. We're going to put gold back in the system. But no, you can't touch it. You can't have it. No, why do you keep believing them? I don't believe them.
Yeah. Welcome back. Today is July 20th, 2026. And before we begin, here's a quick precious metals market update. Gold is trading around $4,021.89 per ounce, up 0.45%, while silver is trading near $57.09 per ounce, gaining 2.59%. As central banks continue accumulating gold and investors monitor inflation, rising government debt, and geopolitical uncertainty, precious metals remain at the center of the global financial conversation. In today's video, we'll break down Lynette Zang's latest warning and why she believes we're witnessing something the financial world has never experienced before. Let's dive into her biggest message and what it could mean for gold and silver investors.
You know, I guess I have to ask you which stuff you're referring to, because if you're talking about gold and silver physically in your possession, no fear whatsoever. I've got something where I've got 36 different people, entities globally that I can sell this to, and 33 different. So no matter what, I have the broadest base of buyer. Please tell me how many areas that they make them gold, silver, and platinum so that you think that they have value. Tell me how many different areas is this stuff used in? Yeah. One.
Yeah. I just see the monopoly money, and I think it's kind of similar to that.
Tell me the difference between this $20 bill and this $20 bill. You agree to work for this one.
You've been educating people on this a long time. I mean, in the past 6 months, say, since we had that little run up, things got a little bit frothy in the gold market for the price on the spot. I mean, are people coming to you more and asking more about this? You said they're waking up.
Well, they are definitely waking up. And actually, what I love the most is the younger people that are coming in and going, wait a minute, I don't like all of this stuff that's going on over here. But in the last 6 months with the run up, because people look at the spot market and they think that that's reflective of the true value of gold. But again, that's used in one area and it's used for speculation, and all of the money that they've printed is in the system. And so what's really moving any of these markets, and I don't care which intangible fiat market you're talking about, but spot gold and silver got momentum. So you had a flow of funds, and you can see it in the ETF moves, a flow of funds that pushed spot gold and silver to overvalued technically, not fundamentally, but technically overvalued. And then, Oh, SpaceX came out. There's a shiny new toy. So that flood of money went from here over to here. Oh, wait, what happened with the semiconductors? Oh, that flood of money left here and it's going over there. I mean, come on. 5% moves in a day, 15% moves in a day, 1,500% moves in a month or a year. That's not investing. That is speculating. That is trading. And why would you trust a volatile market that it's just a trading, it's just a pickup of this? But I mean, look, the biggest bill that I have in here is also from Zimbabwe, $10 trillion. I'm a trillionaire, but I can't even buy one egg with this. But people get blinded by numbers. So we now have the first trillionaire in the world. One of my favorite movies is called Gabriel Over the White House. And it was, you have to watch this movie. It came out in 1933. And it's about a president who's really kind of a gadabout, and he goes out and parties and all of this, and he gets into a car accident. And Gabriel, the archangel, comes down while he's in a coma and makes him a better man and a better president. And so at some point in his travels, he's talking to all of these foreign heads of government. Now, this is after World War I and before World War II, right? So we have to think about the context. And he's in there and he's saying, Mr. French President, you owe the U.S. $1,000 million. Wait, what's $1,000 million? That's billions. They didn't use the term billions in commonality in the early part of this kickoff. And yet now, do you think Elon Musk is the only trillionaire that's going to be?
So how much wealth is being transferred right now?
All of it. If we only have, let's assume that they're not lying about this or juggling the formulas. I'm going to do a little more work on that one. But officially, out of that 100 pennies, you have 0.029 left. That's all wealth transfer from the many to the few. And it's disgusting. And it is not okay with me. And it's especially not okay for the future of my grandchildren and their children, etc. And so I feel like we have a huge obligation for the future and to leave this place a better place. And every time you go to the grocery store, prices are noticeably higher, right? That is rapid inflation. That's what also loses the rest of the consumer confidence, the public's confidence.
But I thought we were only 4.2%.
Yeah. Well, I don't think that's true, but even at 4.2%, are your salaries going up at 4.2%?
Exactly.
By design, you will never beat inflation on a normal wage, right? They force you out on the risk spectrum, and then, so how do you go out on the risk spectrum? Oh, you work and you have a 401k. And so you give a money manager that money to work with. But no matter what happens with it, you're the one that's going to reap the rewards or suffer the consequences of the choice that this person makes on your behalf. And if they don't understand what's happening in the system, why do you trust them? Well, for one thing, we execute a sound money strategy. So I don't say that everybody should do what I do. You have to understand, I've lived in this arena on some level my entire life, thank you to my Uncle Al, and I'm going to be 72 in October. So I don't deny my experience, and I am quite clear. I came into the industry in 2002 when the formulas told me that we were now entering the end phase of the currency's life cycle. So what we look at is, first of all, we establish what are your goals, what are you trying to accomplish, and what is your current standard of living. And then we use barterable fractional gold and silver, as well as cash, as well as maybe even some gold backs or different things, or even digital gold like Kinesis or Glint, because both of those are redeemable. And that we look at to secure your standard of living, make sure you can always pay your property taxes, etc. Then we look at whatever wealth you're choosing to accumulate, either maintain a 401k that you can't access or 403b, something like that. And we want to make sure that you have the appropriate balance so that if you lose access to this, because that's another big piece, right? Any of those accounts, your bank account, your brokerage account, you are granted access, which also means they can take that access away from you. And some people have certainly experienced that.
Lynette Zang believes today's economic environment is fundamentally different because of record government debt, persistent inflation, and declining purchasing power in fiat currencies. According to her, rising gold prices aren't simply a sign that gold is becoming more valuable. They often signal that paper currencies are losing value over time. One of her strongest messages is that investors should focus on physical gold and silver rather than chasing short-term market trends. She argues that physical precious metals are globally recognized stores of value with broad international demand, making them different from paper assets that depend on financial institutions or counterparties. She also points to continued central bank gold purchases as evidence that many countries still view gold as an important strategic reserve asset. At the same time, Zang warns investors not to buy purely because prices are rising. She explains that both gold and silver can experience normal corrections after strong rallies, and successful investing requires patience, discipline, and a long-term perspective. Her advice is to prepare for uncertainty instead of trying to predict every market move, using a diversified strategy that protects purchasing power while reducing emotional decision-making during volatile markets. With that perspective in mind, here's the most important takeaway every investor should remember.
I think they're starting to, because that particular issue wasn't as well received as they had anticipated. And so we've got a lot more of these new IPOs coming out, et cetera. And so we're going to see, but with geopolitical things changing from day to day to day, back and forth, it's like we're on a bridge that's in the middle of a hurricane, and the bridge is kind of going like this. Exactly when is it going to implode? But I do think that people are starting to recognize the debt upon debt upon debt. And I think it's quite interesting when you look at these hyperscalers that used to fund everything out of their earnings. Mm-hmm. And now they're going out and taking 800 billion, 260 billion. Like, that's nothing, but it isn't, because there's no value left in this. And that's what people need to really understand. And so those, going back to those investors that are investing on your behalf for your retirement, they're buying that crap on your behalf.
Someone's stuck holding the bag, right?
Yeah. Who do you think that might be, Jeremy? Right. And it kind of depends, like you said. So somebody that's really young, I mean, that's why we do the dime cards and we educate. And I'm super happy because Rick, I think, is going to do a program next year for the younger generation. And so I have some surprising things, if he invites me back again, that I would happily do, because we do have to educate the younger generation. But they're not going to have as big a need for, let's say, cash. So where you get a big differential is they can just keep stacking. Just keep accumulating. That's all. Just keep accumulating. Whereas, let's say we're talking to somebody that's retiring, and let's say that they are using the dividends off of their stocks or interest off of their bonds to generate their income. Okay, well, they got to have that income. That's going to be very different for somebody that's young. Maybe they're living at their parents', or they have a job that can cover their expenses, what have you. And so it isn't that you're going to have less, but you're going to look at all of their holdings and any fixed rate debt. Well, if we do that overnight reset, you can pay that off with dollars that in this country, but wherever you are, in fiat money that has zero value, which is exactly what the governments do. So you're following the government program. Somebody younger is not going to have that, and that's that same need. So all of our strategies are customized. And we love working with younger people and helping them. But at that point, they're just going to accumulate. Somebody that has established wealth, we need to make sure that they can always pay those property taxes, even if the house is paid off, because otherwise you'll lose the house, right? And we've got to keep that shelter over our head. Gee, why? Do you think it might have anything to do with the 33 global buyers? Yeah. And that's the thing. Anything that is intangible and is in the system requires confidence and liquidity. But physical metals, that is the asset, right? Remember, this is the real asset, the sound money that has performed for thousands of years that governments and central banks cannot inflate away because it has the broadest base of buyer. That's why. It's not rocket science. And again, I'm going to remind people, oh, it's not this one, this one. This is a claim on money, right? And this is just debt. What do you want to work for? Because I'd rather work for money. And that's why when you say I'm all in, why do I want to keep this garbage? I know what that is. And yeah, I'm not in stocks or bonds or ETFs or any of that or cryptos because all I can do is convert them back into this. So how did that help me? You know what? I think this is where it's quite handy that I was the youngest of 7 and nobody listened to me, and that didn't matter. I learned to let it like water off a duck's back. I am on a mission in this world, and it is on education. And people have been so surprised that I've been handing out silver. Jeremy, I go all around the world talking about sound money and handing out pieces of silver. And if I'm in a restaurant and I see a little family, and I usually, if the kids are about at least like 5, 6, 7 or older, I'll walk up to that table and I say, do you mind if I give your kids a gift? And I'll give them the dime cards and I'll explain it and say, you know, here's silver, blah, blah, blah. And the parents are so interested in it, but so are the kids. So there's a QR code on the back. This is really about creating a global movement, because if we don't, governments and central banks aren't going to give up their money monopoly. Maybe they'll transition it from this system and take even more control, because you always have to look at not just what do you gain, how convenient. This is so much more convenient than, oh my God, this is going to pull your pants down, right? What do you lose? Because let me tell you, we lose off of a gold standard, and if you don't hold gold, you lose your freedom. At the end of the day, that's what really protects, is your freedom. And what is that worth? A little bit of inconvenience. Yeah. Yes, probably yes and no, right? When things run up, this is how they got people involved in the cryptos. They allow things run. But you've got to understand, a rise in gold price is an indication of a failing currency. And if you get that, once you get that, well, frankly, you start to make different choices. So, and I can tell you for a fact, because a lot of the newer strategy specialists that have not been through this before, I came into this in 2002 and I've been in these markets forever. So I'm used to the run-ups and the run-downs. And I warned them, because everybody wants to buy gold because it's going up, and they want to buy silver because it's going up. Right. And I said, you've got to train your clients properly. It is going too far too fast. If you look at any of the lives, any of the videos that I did during that period of time, it was always how far away from, here's the 200-day moving average. The price action acts like a water skier if that 200-day moving average is a rudder on a boat, and there's only so far this way or that way, so above or below that it can go before it's coming back to center. And 10% either way is a lot. I think silver at one point was something, don't hold me to this, but I think it was something like 90% away from the 200-day moving average, when 10% is a lot. And I think spot gold was something like 50 or 60% away. Don't hold me to that. It's easy enough for you to go and check.
Lynette Zang's core message is clear. Focus on protecting long-term purchasing power instead of reacting to short-term market noise. Whether you invest in gold, silver, stocks, or a diversified portfolio, understanding inflation, debt, and the global monetary system can help you make more informed financial decisions. Now we'd like to hear from you. Do you agree with Lynette Zang that gold and silver could become even more important in the years ahead? Or do you believe traditional investments will continue to lead the markets? Share your thoughts in the comments below. If you enjoyed this analysis, please like this video, subscribe to the channel, and turn on the notification bell for more updates on gold, silver, the economy, and global markets. Thanks for watching, and we'll see you in the next video.